It is good morning, everyone. I hope everyone's had a good week and is excited for the next week. I'll be recapping week 24. I'll start with Sunday. So Sunday, I was looking for the current price action to go lower and see like a continuing lower closes on the weekly chart. I talked about what would get me to have this bias into this being a high, a short-term or long-term high or an old high, which we come back to later. And it would be to invalidate and close below this weekly candle, that range. If you go back and you look at what I was talking about ahead of this week, last week, you'll see that. And so now I'm continuing with that bias, and I'm looking back in the last 60 days for any of the PD arrays from the day which the market shift occurred, which was last week, Wednesday. I am looking 60 days back at any of the PD arrays. So I have this sell side liquidity and that sell side liquidity and a bunch of daily fair value gaps in between that we could draw down into. Now the daily fair value gap here was supporting price at the end of the week. So I had this inverse fair value gap inside the range that I was looking at. Okay, and that's what I preferred to see was this price. I didn't want to see this really get traded into, right, or filled at all, because this would be a breakaway gap which would allow for even lower prices. And if we're going to be very bearish at the high of the range, we're often going to leave these. I also noted that there was SMT with the S&P and the NASDAQ. And now this is significant because even though in the past we had SMT between these two, but it was always the NASDAQ that was making those higher highs and the S&P making the lower highs. And I pointed out each time that this may appear as SMT at first, but because the Dow and the S&P are slower than the NASDAQ, that's why it's SMT. What's going to happen is that the S&P and the Dow are more likely to catch up instead of it actually being SMT. But if you see the NASDAQ leading the charge, making the lower high before the S&P and the Dow, then you know that the sentiment is going to be lower, and that's real divergence because the NASDAQ is the faster one, so it's going to lead. And then it starts to draw lower, closing beneath the range I was watching, to then change my bias to being short on the weekly bias. This is the dollar. So the dollar sweeps sell side and is starting to resume higher time frame premium delivery. Now the dollar this week sort of edged higher. It's a bit sideways and it can be like that, but I want to start to think about seeing a rally in the dollar and having that risk on scenario where the dollar is going higher, which would be easier for assets and anything priced in dollars to make a run lower. It would make it easier, more feasible to see or to manifest in a low resistance form. And that would just support this seasonal tendency of going lower in the month of August into October. So this is also Bitcoin. I'm mentioning Bitcoin because I have been watching Bitcoin. I called the low there from last week. If I go back and show that, and just I think it's a nice market maker buy model that you could take part on. And so, I said if we close above this, which the candle was printing at the time because it's the weekend. No, this is the bonds. It was on Monday. Yeah, if we close above this, and then I would want to be buying inside of that and then see a quick run to buy side liquidity. So I'm just updating on that Bitcoin, saying that we are indeed heading towards there. And today we made, this week, we made even more ground to get up to that buy side liquidity, which is nice. So this is about a 15% gain that I called it, which is pretty cool. Not financial advice, of course. It's just having fun doing that. But Monday we've started the delivery higher this week, so we started to kind of close up towards this fair value gap. And now one thing I'm noticing is that we closed above the previous down close candle, and so the order flow doesn't really seem to be fully bearish, but it is the beginning of the week. And there was no news on this day, but keep in mind that Biden did drop out on, he announced that on the weekend. So I think even that was news itself. All the money that was going to react to that news has to react on Monday when the markets open. So even though there was no news, I still think this Monday was pretty tradable. It was pretty nice. But I will be watching data from the 3 days back and expecting a run into any significant area of liquidity in the past 3 days. So my current intention is to buy side liquidity at the low of the daily fair value gap. So right here I had this buy side liquidity, not because it's relative equal highs or because it's a daily fair value gap, but just because Monday closed higher and seemed to have created a market structure shift. It retraced, rejected higher from the down close candles. So clearly down close candles are supporting price. I'm assuming bullish order flow here, higher prices. All right, so I'm looking back 3 days from that Sunday. So you have the Friday, the Wednesday, Thursday, and then the Wednesday. All right, so I'm not considering a run all the way up here, but I'm saying it's possible we run up to there. Now I talk about what I would want to see tomorrow, but I would want it to happen within the next 2 days, which then I can expect lower prices. So as price was trending higher all day towards an area of buy side liquidity at the relative equal highs, we saw a retracement into discount, which attempted to fill the regular trading hours gap and go towards the new week opening gap, which still has my attention to be filled. And this is another thing that usually we're going to fill this new week opening gap if we're going to go higher for the rest of the week. Because we didn't do that, I know that we want to go fill that, and it's going to be, price is going to really want to do these deep retracements to go and fill it. But I didn't want to see deep retracements, and I explain why. Price made a low at 50% of the regular trading hours gap before quickly balancing out the morning leg down, leaving a bullish breaker. I would like to be quick tomorrow overnight, higher, and not stay within this morning manipulation too much. So that gray shaded area, this is a retracement, which could be seen as manipulation. It's a retracement into London's range. So London made a range higher, it was bullish, and then we retraced at around 9:30 open to make that Judas swing into like the OTE optimal trade entry into the London range and a discount PD array, and then we reversed and continued higher. But the thing is that we're just getting above that high and rejecting. I usually want to see it really go through the high with speed and distance, and I'm kind of allowing for it because it's the end of the day. But I said that I wanted overnight to really close higher and create distance from this range, that gray shaded range, and the price, because this is completely balanced. Like you see how we went lower and then we went immediately higher. So it was immediately rebalanced, and there was no need to go back into this range. And so if we're spending a lot of time in this range and we're failing to really expand and to continue this continuation from the retracement, we wouldn't want it to come back into that range unless it was actually going to target lower. And so I highlighted that to somewhere here, I believe. Oh wait, yeah, I said right here, I would like to be quick tomorrow overnight higher and not stay within this morning manipulation too much. Obviously that's not what happened, and then we saw lower prices. But one indication I had that we could seek higher is the Dow versus the Nasdaq, watching how initially Dow is more bearish than Nasdaq, which is consolidating the 10 o'clock hour. Eventually Dow makes a deep retracement towards the highs, where Nasdaq, already closer to its highs, fails to match the strength of the Dow. Markets then fall, with the Nasdaq leading the charge lower as it should in clean conditions. To time, well, this move would have asked for a lot of patience. Let me just change that. And experience sitting through all the consolidation. So what I'm highlighting here, it'll be easier to see, but at 9:30, right, we see that both the Dow and the Nasdaq are trying to move higher, but the Dow goes lower before the Nasdaq. Like after 3 candles, it starts to trade lower, while the Nasdaq's still trading higher. So the Dow is going lower before the Nasdaq is going lower. And so immediately I'm not favoring a bearish bias. I'm not favoring to go lower because the Dow is doing it first, right? And then what do we see when we get down to around 10 o'clock? The Dow makes a huge retracement higher above this high, the Nasdaq doesn't. So now the Dow has kind of gotten back in sync with the Nasdaq, And now the Nasdaq starts to really fall at around 11 and see these nice runs lower. But it has to first let the Dow get back to a deep discount and fail to go with as much discount. So then it's back on top and then it starts to lead. That's just something that I noticed, that whenever we see a 9:30 open and the Dow and the Nasdaq aren't trading properly, they're not correlated, and the S&P too, you don't want to trade, because what's going to happen is one of these is going to consolidate, is going to chop around to give chance to the other one to get back in sync with it, so then we can continue the delivery. So just be very careful whenever you see these not correlate. Oftentimes it's going to happen in the summer and you just don't want to trade. Okay, and this is the 5-minute chart at 11:30. Alright, you see what am I highlighting to here? Now look at 11:30 when the Nasdaq made its low. What is the Dow doing? It is lagging behind and following the Nasdaq's lead. This is how you qualify proper clean market conditions. This isn't financial advice, by the way. This is what I think and what I saw. Markets then rip higher, taking out all the sellers over the morning. So look at the Dow making the deep retracement after being more bullish than Nasdaq being more bearish. You see at 11:30 Nasdaq make a low and start to trade higher before the Dow actually does, while the Dow consolidates. So once these start to move together, you can look for buys to run it up all the way higher and see high probability conditions. Once buy side liquidity is taken, we make a significant retracement lower before moving sideways, because the Dow was leading lower before Nasdaq. I was uncomfortable seeing this move be quick and easy lower because of my baby food model. I'm only asking for a piece. So I did trade within here. I took this trade there, and wait, hold on. Oh yeah, okay. No, basically just summarizing what I just explained there. So yeah, so I saw price come all the way up above the buy side liquidity on the left, above the short-term high there, and I was going in with the idea that this would be a breaker, and I kind of saw that the Dow was starting to follow the Nasdaq because they retraced quite significantly, and then I decided to take a very small trade, just a small scalp, because I wasn't trusting the conditions we're in, and I would have been right. I mean, I could have had more points, a lot more points, right? But overall, it moved sideways. It came back to my entry one more time, and then it would have then moved only like an hour or two later. So that patience that I talk about having, and the experience to talk about having to see this move manifest lower and then higher, these are hard days to trade, right? Even though there's still really good movement and it moved by a lot on this day and it's readable, it requires that patience to be able to sit there, wait, and that's just how summers are like. And then we go to Tuesday. So remember, main thing I'm looking at Tuesday is the balanced price range from yesterday. So that down close candle and an up close candle higher, I'm treating that like an order block, propulsion block. I don't want price to come back into it very much. And so what does it do? Immediately it does. And that just tells me that, well, first of all, I don't trade because there's no news on Tuesday. But that tells me that, we're not really we're less likely to see a run on buy side liquidity. Okay. So daily chart found some resistance today on the inverse fair value gap to create a down close candle, and we also closed lower. That's another thing too. We will see if we run to the buy side liquidity or if we turn and trade lower. If we do trade to the buy side liquidity, I would prefer to see it tomorrow, and instead of Thursday or Friday. I should probably add that because of the 3-day look back. But I have not fallen in love with this bias, since dollar is also still bullish, and we have spent a lot of time in the balanced price range from Monday, which is not convincing me we will go to buy side. The high impact news is Thursday, so because of this, I am still allowing higher prices and a reversal on Wednesday, and so I will be reserving most of my focus on the end of the week. Other than that, today I found a lot of support in the 1 hour bullish fair value gap around the midnight open. This is very lackluster higher prices. So to me, really, it doesn't matter if it completes this buy side liquidity run or it starts to trade lower. because I'm giving it until Wednesday and Thursday. Like I may still go and look for scalps, but I'm keeping bigger trades that I'm going to hold, and most of my attention on the news where the days where there's news and the news that creates volatility, because that's what really is going to move the market. So it doesn't matter to me what the bias is so far into the week. But the London session was nice again, which reversed the lower Asia price action to top out at lunch. So London session in the summer, this is something I noticed last year. London session oftentimes moves very nicely, and sometimes Asia, but pre-market, ahead of 9:30 and 8 a.m. also moves very nicely. Like I remember finding some of the best moves. I started waking up at London last year during summer to find some of the best moves during London, where you're holding for basically the whole day's range. And I'd wake up and then I had those types of moves. But here is very simple. Like we open up at 2 a.m., we go beneath the midnight open, and then 3 a.m. reverses and goes higher. That's a typical London session to top out at the London close. And then 9:30, we're already kind of reversing. We already kind of distributed above the Asia highs. Like the highest, the best trades to look for day trading, the best, maybe not trades, but biases to look for. This is in ICT's core content, is when you're buying, beneath the midnight open, because that's underneath Asia range. So you typically want to see the Asia consolidate, leave a high of the day, and then London go lower, or let's say you're on a buy day, London goes lower, makes a low of the day, and you want to buy it to run it up whenever that is, to run it up above Asia to make the high of the day, and close out around lunchtime. That make it top there, and then do whatever the afternoon does. Maybe it continues or chases into the day's range or hunts lunch stops, whatever it does. But this is over here. We're already above kind of like the Asia after around 9 a.m. We're already above kind of like the Asia high, so it's just lower quality, and you see it moves sideways quite a lot. We don't really have those really nice buy days in the summer like that. But the move at 10.50 was extremely bullish and very clean, but price before it was not. How did I expect this to be poor? I don't say how it was. Maybe I say it then. Examine the 10 o'clock hour which the Dow took off and led higher, while the Nasdaq consolidated and it seemed like it wanted to go lower. Once these were correlated, price started to seek lower before we had poor and choppy market conditions. So once again, I'm talking about the correlation between the Dow and the Nasdaq, and then the 11 o'clock hour is really what moved, because you see at 9:30 we start to open up, and you see that the Nasdaq is sort of consolidating, moving sideways, and the Dow is moving higher at this time. So right here you see the Nasdaq then run lower, but at the time Nasdaq was already kind of starting to go lower while the Dow is going higher. These were not correlated. They weren't moving the same. So you wait a little bit, then they both make these retracements into the 11 o'clock to make the low, and then that's when they start to correlate, and then they start to make those runs higher together, and then you have cleaner market conditions. So again, always make sure that when you want to, if you want to look for the best trades, I need to make sure to wait until the Dow and the Nasdaq are 100% correlated, and the S&P, then you have really good market conditions. Now this is just a 1 minute view of the morning. So lots of choppy price action. You can see though, like after 9:30, we kind of make this run higher, move sideways. We do have nice runs on liquidity, which create, if you look at this whole thing as a consolidation, you could kind of see a market maker sell model in this, and then it turns into a market maker buy model. Like there's still good ideas to play on. It's just demanding a lot of more patience to sit through it and wait until those really nice moves. So Wednesday was my birthday. It was a very big day, and wasn't, for trading wasn't the best day, because I did try and trade this, even though I said that I wouldn't. And I traded on like my TopStep account, and I tried to go long to see a manipulation into a fair value gap at around 10 o'clock, and it didn't work. And then I tried to go short, and the thing is that I wasn't holding these shorts long enough to see it run. It was kind of moving sideways, and I was trying to short inside these candles to take part to that sell side liquidity and lower. It would have been nice, but unfortunately, I would do stuff like it wouldn't go to my stop loss, but I would close it and draw down because it just kept moving sideways, and then it would start to run, and then I'd want to get in at a lower price, and then it would go to my stop. So it was really like I did not handle trading very well there. I was poorly managing my trades, and it is a challenge that I don't really care about, and I'm mostly doing it for practice during the summer. But I still am trying to treat it seriously, like if it was real trading, and I'm trading my model, or trying to at least, or like I'm not just trying to do whatever. And in this day, like I am really just doing whatever, closing trades early, and taking new trade ideas because I'm revenge trading or I fear missing out. Like I shouldn't be on these things, and this day was just a bad day. Well, it wasn't a bad day. It was a good day because I learned a lot from what not to do, and then gave me a lot of confidence because the next day I made it all back. So it was good, but not much today other than the fact that we had this is a clear change in the state of delivery, if it's not obvious already, that we are not looking to go higher. Like we are really bearish right now, right? We're gonna go down to maybe this sell side liquidity, and I maybe not. I don't want to speak too much about where we're gonna make the low, because I'm mostly just waiting for September. So like I don't really care how low it goes. I just know that we should start to see a reversal towards the end of August, mid-September, maybe beginning of October. Kind of like make that last manipulation and the low there, and see the Christmas rally. So I'm less interested in how low we're trading in. Another thing too is that if this is the summer where money is kind of out of the markets, there isn't much big money in the markets or on vacation, and prices trading lower, it's probably not going to be the highest quality, and so it's another reason why you want to just stay out in the summer, because big money is out. And so even though it's going lower here, it's very sporadic. You can see like it chops around, and when it actually moves lower, it doesn't really give you an opportunity at all. And it was kind of like that last week too. So these are some of the reasons why summer may be the best to do less. Like maybe tape read more, or paper trade, and like stay away from risking the most, as if you're risking during spring or winter. All right, now for Thursday. So another down close day on Thursday, and I mentioned how it's a little bit more tradable. And we made a run up to buy side after manipulating in the morning. The high was made at the low of the daily inverse fair value gap, and then sold off in the afternoon. That daily fair value gap right here. We consolidate ahead of 9:30 and then make manipulation swing lower. This then led to a clean run higher. There was 8:30 news GDP which released, and so this really helped price move well. There was a nice move lower in the afternoon too. So a nice run up during the morning, which drew on overnight highs at Asia highs. This is what I mean when you have good quality trading days, when you want to buy underneath the midnight open where the Asia range is, and target the high of the Asian range. You were able to do that today, and so we'll look at it on a lower time frame. But we consolidate at 9:30, then we can manipulate at 9:30 to make the Judas swing. We run higher, but then there are pretty good long opportunities ahead of 9:30. So in the morning to form the breaker, and then after the manipulation, my 2024 model is evidently there in the 11 o'clock hour and the 2 o'clock hour. Right, so if you look at this price action here, you got your higher time frame levels. Go back to the 15-minute chart. The fair value gap here, which price, you can also look at any of these inverse fair value gaps too, or this small one there. But price uses a 15-minute PD array to find support. Then on the 5-minute chart, you get a bit of consolidation and a run on short-term stops, or the initial move into the gap and then initial move away from it, and then you have the second stage manipulation or sweep before we actually deliver. And then on lower time frame, there's an inverse fair value gap that you see with the pink red lines. You can't see it on this time frame, but then it delivers higher above this buy side liquidity. So it's a little bit up into premium, but you have the idea that this is a balanced price range and the price came all the way above it. And so we don't really want to come back into this range. This is kind of like what I meant Monday. This is kind of what I wanted to see. It can consolidate just above at the high of the range or at the very premium part of the range, but it should be really quick to run away and create distance between the high of the range and where price is. But then, it comes back into it, spends more time. So in the 2 o'clock hour, you could see there's another 15-minute PD array here after taking buy side liquidity, failing to continue and trade higher. You then get a 5-minute short-term high, which price then sweeps it, gets into the breaker, then moves lower. So you could go on the lower time frame, look for scalps in the direction lower after that occurs. Back down to a fair value gap, which was left open from the morning. And so this is a trade that I actually took pre-market right before the 9:30 moved lower. I was sweeping the liquidity up here, those 5-minute short-term highs into the 1-minute PD rate. Now at the time, I was not sure if it would go lower or if it would manipulate higher. So I was allowing it to go higher, but it ended up actually manipulating lower. So it traded lower, made a low around 10, and then quickly reversed. It didn't really give an opportunity to long down here. Like there's nothing that I see down here that I would have trusted or wanted to take, but later on it does, and this is pretty nice price action. And in the afternoon you have that nice price action too. This is what I was talking about, these small, this 30-second fair value gap I suppose, but you can use an inverse fair value gap or an order block, to go short. And after you have that higher time frame PD array and the short term run on those stops occur. And for Friday, we had a down close candle to finish off the week as expected. Today drew back into the previous day candle. And I mentioned how this may be a measuring gap where the daily fair value gaps are lying. So I'm talking about the inverse ones. So this gap here, let me make sure daily inverse. So this is this could be a measuring gap, and what a measuring gap would be is you go from the high and you trace it all the way down to the low, and then you want to deviate that and look for 1 deviation or 50% deviation or whatever, and then that's like a measured move. That's why it's called a measured gap, because you're measuring a move. It's like halfway into the price range, and this halfway should be the equilibrium. And once we've actually retraced into discount, we should have the second stage, which doesn't really want to go back into discount too much. And then that's the idea behind the measuring gap, is that it shouldn't really want to let price go back above it. It's at that point of equilibrium where price is in this distribution phase. So this, if proves to be heavy resistance, you can expect this to be around equilibrium and then see further movement down with it. This also could be maybe the measuring gap. I don't know. I think I wouldn't say this is too high into the range to be a measuring gap, but I'm no longer really wanting to frame a retracement into this gap. It's possible that we maybe run into this slightly and then, but I wouldn't want it to really fill, same as this one up here. And I'm also actually considering this immediate rebalance where we don't actually trade into this gap at all. If that happens, then we're going to be very bearish. But I'm just watching to see, will this be immediately rebalanced and then continue to go lower on Monday or Tuesday. But that's going into next week. So today was a classic retracement on London range buy day. We did, however, stay restricted inside the previous day range. We'll be interested on seeing how both sides play out next week. And if you look at Thursday range here from high to low, You can see today, obviously, even though it resembled this buy day where we retrace after London makes a high, we retrace in New York, we go deep underneath London consolidation into the Asia range, and we see a little bit of reversal to then take out the highs left in the early morning. So it was a bit of a sideways price action with London, and then the early morning making that move lower. 9:30 finishing off with a Judah swing, then going higher. This was an inside day that just looked for intraday liquidity. It didn't really go to any higher time frame levels, so maybe not the best day, but it's still pretty good for intraday trading. And I'll be paying attention, but what I'm saying is to the high and low, because that previous day will still, because we traded inside of it, we'll still have a lot of liquidity at the high and low of that day. But in the morning we get a lot of consolidation after trading beneath London lows, and then eventually you get price, which, well, one thing again, before I talk about that, one thing you can kind of use to anticipate this consolidation is, again, you look at the day. What happened today so far? We opened up during Asia, we went higher, midnight opens, we continued to go higher, 6 a.m. opens, then we started retracing lower and already hit the London lows. So is there anything to do now? We've already retraced into the range. We can expect to move higher, but we chop up. Why? To introduce more liquidity. I think I wrote it down here. After a big consolidation in the morning, price finally took off near lunch hour. The morning price action likely aimed to chop up traders because of the overnight price action, therefore introducing more two-sided liquidity to the markets before resuming the trend. So it can't just continue trending in one straight line. It needs to introduce a counterparty, and it does that by chopping around, retracing. So this is a retracement and chopping around until the 11 o'clock hour after the initial market, boom, where everyone's in there trying to trade money. It waits until near the lunch hour to make its delivery, and then it goes higher from there. And as when it's doing that in the 11 o'clock hour, there's a wick here, constant encroachment. That could have been your 15-minute PD array. I was trying to long here, and unfortunately I didn't place my stop correctly. The 15-minute PD array really isn't obvious here because it's not really a fair value gap on order block you can use. But there was this nice 5-minute gap that I was seeing, and I noticed how price ran up above this inverse fair value gap, which is really nice and obvious. And so that's when I see, okay, well, order flow seems to be bullish now. We're being supported by consequent encroachment. All right. And I thought that this would be enough, but we had this one more move lower, which stopped out my trade. But this was my trade here. I was seeing the bullish fair value gaps created here after inversing these fair value gaps, and then price used that to run higher, slicing through all these highs, relatively equal highs of the consolidation, and then continuing higher past bigger highs overnight. But it unfortunately retraced a little bit deeper than I anticipated. I didn't think it would really want to come back into the 5-minute fair value gap, and when I saw it close above the pink shaded fair value gap, but you had the same trade idea present itself here. I just got in at the wrong time, and it happens that honestly, this loss right here is one of the best losses I could have taken, right? Because I did everything right here. I mean, it's my 2024 model. It's a play that I was trying to hold to at least this high, which would have been this is a 40 points already. It would have been real great if I was able to capitalize on that, and I would be 2/3 of the way past my funding challenge, but on Top Step. But it just so happens that it stopped me out. It went retrace a little bit too much, and that will happen many more times. But it's important that when that happens, I don't do like I did the Wednesday and start to trade 7 different times and try to make it back, and then doing things that don't really match up with any particular model, but that instead I stay restricted and come back later at a different time. Or what I could have done maybe is continuing with this idea with less leverage, because it did end up still playing pretty well, this exact trade idea, when it comes back and uses the inverse fair value gap as support once again to go higher. So that's really it for the week. I believe there's nothing else to show. Yeah, that's so. Thank you for anyone that watched, and I hope that you were able to learn something. If you did, let me know. And yeah, I enjoyed putting these out, and well, thank you for some of the support I've been getting. I really appreciate it.